Good morning, ladies and gentlemen, and welcome to the show on this, the 23rd of Wednesday, the 23rd of February, 2022. Let's get right in there and let's start the charts right here and take a look at what's going on. I wanted to show you guys this. This is the area of eastern Ukraine, where the Russians have moved in. The area of Donetsk and Luhansk, near the Donbass region. That's not small. That's quite a large area. It goes in, well, to give you an idea of size, it would be like all the way, it would be like the whole area, New York area, the whole New York region, say down as far as Philadelphia and all that, the whole region there. Maybe almost as far down as Washington, New York to it's a big area. It's like 100 miles, over 100 miles in there. And there's two big cities in there. I'm going to tell you guys what. I can't see this going any other way except Putin is going to put reinforced defensive positions in that region. I can't see it going any other way except that. And that means that things are probably going to be quiet for a while. How long will things be quiet? Probably for quite a while, because he's got to establish defensive positions in there, and he's going to be moving troops in there. And that's troop movements take time, you know. And so it's probably, unless Ukraine attacks while it's probably going to remain fairly quiet. But once he gets those defensive positions in, I mean, it might take a little while, but once he gets those defensive positions in other words, he gets himself rooted in that region, then look out. That's what I got to say about that. But so things are probably going to get quiet there for a little while that's happening. It takes time, you know. And they're not talking about that in the media right now. You know, I mean, it's just the big thing right there right now is the fact that he's moved into Ukraine, the eastern side of Ukraine, and those two regions have declared themselves as new states. Like, they've been recognized by Russia as the region of Donetsk and Luhansk in the Donbass region are now like anyway, that's what's going on in Ukraine. So what I'm expecting on my channel is for things to slow down in there for just a little while he creates defensive positions. The next thing we want to look at is the silver price today. You know, it's been going up. It's up 37 cents today so far. I think we've passed lunchtime. I think, in other words, I think that the train's left the station at this point. Okay, it's still down low. Price of silver still down cheap, $24.45, and gold too. I think they've both left the station, and I think ultimately over the next couple years, you're going to see that the gains that people had in cryptocurrency, you know, you're going to see those kind of gains come to. And look, if markets go down right now really ferociously, which they very well could, I think there's going to be a fear trade coming into gold and silver as well. People are going to be buying it as a safe haven asset against what's happening in the financial system. And then on the other side of that, when the Fed switches back to a looser monetary policy to try to stem off the problems that they're creating right now with this tight monetary policies that they're putting in, then we're going to really see silver and gold take off. So I think that at this point, all this doldrums of the banks suppressing the price of gold and silver, the major bullion banks, causing the spot price to go down using paper derivatives products, I think that might be history now at this point. I don't think from moving forward, from this point, there's a strong possibility that they're not going to be able to control the price of gold and silver. And, of course, their paper short contracts could become more and more valueless as there's no underlying metal to support them. I mean, no underlying metal available for sale into the retail market to support. And what might happen is more and more control over the price of gold and silver might start shifting from the west to the east. You know, they have a Shanghai Gold Exchange where they actually deal in a real metal over there. Yeah, what a novel concept. You know? Over here it's all paper. Piles and piles of paper. That's supposed to be the metal. And I've heard it could be as high as 400 contracts for every real ounce of silver out there. There could be as much as 400 ounces of paper contracts saying you own this ounce of silver, but it's just a piece of paper. What use is it if it has no relationship to the underlying actual physical asset? Ho ho ho, what a time we are in right now. This is it's a weird time in human history. Strange. There's so many things that are absolutely bizarre. And a lot of things that I won't even touch on talking about because there's so much control out there right now. I mean, looking at a silver price though today at $24.44, and it's up 36 cents. Let's take a look at crypto. Now, don't underestimate crypto. But I think the big rallies in cryptos are coming back. But right now we're still in the buying opportunity, and I think we're going to be in this buying opportunity until the Fed changes direction. What I mean by changes direction is right now they're wanting to do quantitative tightening, which is reduce their balance sheet reduction. They also want to raise interest rates all the rest of this year. They're talking about like 7 times. They want to do a taper, get down to 0. I think they're getting down there pretty quick now to 0 bond purchases and mortgage-backed securities. All of that they want to do. I say they want to do. The markets are starting to roll out of bed now because they want to do all of that. When the markets all roll out of bed and everything starts to go down massively and it's a shock to the markets, they're playing a very dangerous game here doing this. But I think that they actually want to shock the markets. I think that's what the Fed wants to do. But none of that's going to work. The whole thing's going to be a massive failure, and then they're going to have to go back to they're going to have to stop these programs. That's when the shift occurs for cryptocurrencies. But gold and silver are already getting in on the movements upwards, starting to. Anyway, let's take a look now at the Dow Jones Industrial Average. It's down 142 points today, and they thought they were going to make some gains back earlier today. I think the price was up in the markets, and now it's back down again, into the negative again. I'm expecting a little bit of a pop in these markets. I'm expecting them to go up a little bit. Oh, I don't know, 200-300 points up, is what I'm expecting. A little bit of a bounce. Now at this point, because we've taken a number of days down now, and we're down below 34,000. It might make it up a little bit, but then it's going to start to turn down after that again. And so your gains are not going to make back what your losses were. And so investors, if they haven't already, they're going to soon be realizing this, and they're not going to be in the buy the dip mentality anymore. They're going to be in sell the rally. That's going to be the mentality that's coming, if it's not here already. And we're moving toward that, and it's not going to change until the Fed stops their silliness, which can happen awfully fast when that happens. When they think that they've shocked the market successfully at that point. But they're not going to do anything. They're not going to stop the inflation now at this point. All they can succeed in doing, is slowing it down just a little bit. Have you ever seen these guys? They got this new sport out there right now, where they got a kite, and they got a little surfboard, right? And they get out there on the ocean. They got this kite pulling them along, and they're on the surfboard. Well, they can slow that kite down a little bit. By pulling on the strings the right way, they can slow it down a little bit. But ultimately, they're going to move in the direction the kite's going. By gosh, man, I'm telling you, I was watching one guy doing that, and they can do some spectacular jumps. The kite pulls them up into the air. Of course, because of the pendulum effect, it's not going to pull them up forever. It's not going to take them up like 1,000 feet or anything like that, because what happens is their body weight swings in a pendulum motion after the kite leaves the ground. Their body starts to swing. The rope that's holding the kite, in other words, starts to swing in a pendulum motion. And so it brings them back down again, because it changes the angle to the kite. But they can go up 30, 40 feet in the air, for crying out loud. And because the kite's bringing them down sideways, they can come into a glide, like when they hit using their legs as shock absorbers. It's really something. New sports. Very spectacular sport. I think it's going to take off really good, because it looks like a lot of fun if I was 20 years old, right now, I wouldn't want to break bones trying to do that. But if I was 20 years old, that would be what I'd be interested in, to get out there and try, Couldn't wait. I'd be out there on Amazon ordering myself a kite and a board, I'd be right up for that. Boy, gosh, that looks like fun. Anyway, I'm getting straight off the subject here a little bit. Dow Jones Industrial Average, 112 points down. Now let's take a look at crude oil. 93.13. It's up $1.22. This is one of the big factors right here that's going to keep the inflation mulling along. And yeah, they're slowing it, just like a kite guy can slow the kite down just a little bit. They can slow down inflation just a little bit. But ultimately, he's going to move in the direction that kite's going. And that's the way with the Fed. They're going to be pulled along into the inflation. And they can only slow it down for a little short period of time. It's gonna continue to roar away, is because it's the fundamental. Going back to 1913 or 1914, when the erosion of the dollar began, the erosion of the purchasing power of the dollar began. Back then, a dollar was a dollar. It started as a dollar, but now we're looking at the purchasing power of a dollar. Over those years, it's lost like 98% now of the purchasing power. That's the fundamental behind it. That's not going to change. It's been going on for 100 years. You think you're going to turn that around? Yeah, you might have a sudden deflation, but they can't allow deflation in the system, because money now, what we call money, or fiat currency, is all created from credit. How are you going to allow that to deflate? There won't be any credit left, or no money left. And how does the system run with no money? I mean, so it's you cannot do that. It just won't work. It just doesn't work. Just like deeply negative interest rates won't work either. I'm sorry. Boy, they're stuck. They are stuck. But we're all stuck. We're all stuck too, because ultimately, because they're stuck, they're reaching the end of the line. You never heard the saying, kick the can down the road? Well, they'll be able to kick it a little bit further, but not that much further. The can is going to fall off the edge of a volcano down into the lava and melt into the lava. I'm sorry, but that's it. And I figure maybe a couple more years is all. It's done. We've reached the end of the Ponzi scheme. And that's what all fiat currencies around the world are, is a giant, enormous Ponzi scheme. And if you know anything about math, you know it has to work out that way. You cannot keep a Ponzi scheme going forever. I'm sorry, you can only kick the can so far. And as they've been kicking the can, they've been creating more and more leverage in the system. That leverage has to expunge itself at a certain point. It has to deleverage. And it can deleverage one of two ways. And the more leverage they build, the bigger the crash is going to be when it deleverages. It can only deleverage two ways. One, inflation. Two is an outright default on all the U.S. treasuries. I was watching Peter Schiff talking, and he's saying what he would do. And that's it. Basically, he would stop this madness now. But they had to laugh when he said that because they knew what would happen. I mean, if you did that, I mean, the whole system would completely crash if you tried to deleverage. It just doesn't function. So I mean, that's the way to really get out of this. So is to do the right thing. The right thing would be a default on everything, default on all of this mess, the Ponzi scheme. That's what the right thing to do would be. But no politician's going to stand up there and say we're going to do that. They're going to keep printing. In other words, not to take the heat on themselves. And even if they keep printing, we only got a couple more years before we start moving into a hyperinflation. That's going to be the secondary cause. And that's the direction we're going to go, guys. Yeah, anyway, where are we here? Crude oil at 93.13. Oh boy, isn't it ever getting high. We're going to move on and take a look at the move index now. 95.54. And she's going along upwards, trending up. You notice the trend is upwards over the last little while. Well, you know what? This is your credit markets, and this indicates whether there's stability. Higher the number, the more instability in the credit markets. And I consider 95.54 to be kind of on the high side, meaning that they're not real stable, the credit markets right now. This is the indicator that triggered the repo thing that happened back in early 2020. This was it. This is what triggered it. This shot up overnight back then. Let me see if we can see that. We go out 5-year chart. See this hump right here? Boing! It went all the way up to, what did it go up to? What was it? 135? There back then, that's the beginning of your COVID crisis. You see that enormous spike upwards in it in this mark. But now you look, you can see her creeping up. You see her creeping up to that again. Now it's not up as high as it spiked up to, but it can spike up overnight. And this is they have to do something when this thing gets too high. They have to do something, or the credit markets are going to just melt. Take a look at bonds and rates today. We're seeing a long end climbing. And we're looking at a U.S. 10-year at 1.96 and a U.S. 30-year at 2.26. So we're within the range in the bond yields that's safe. We're back in the safe zone. That 10-year is at 1.96. If the 10-year goes up above 2.25, we're in the danger zone. So we're back down in the safe zone under 2%. 1.96 on the 10-year and the 30 years at 2.26. Still have an inversion between the 30-year and the 20-year. Let me see. We're awfully close to an inversion between the 7 and the 10. 1.96 on the 10 and 1.956 on the 7. I've been spotting a little inversion trying to happen there between those two. Anyway, let's move on and take a look at the dollar index today, and it's started to rise. Just in the last little bit, starting to rise. 96.17. This has been your show. Thanks a lot for listening. Like and subscribe. And, well, I'll tell you, guys, we're moving into a new monetary paradigm that's going to come after a complete crack up. Crack up boom's coming. I wonder how fast it's going to really happen when it really gets going because of the fear it's going to generate. When you think about it, really, You got these guys out there who are invested it deeply in the dollar, and they've got bags and bags and bags of money. And at a certain point, a light switch is going to click off in their head, and they're going to say, this money is becoming worthless. I got to get out of it as fast as I can. I got to get into something of real value. And when they start to dump their dollars then to try to get into something of real value, that money's going to be chasing goods and services. It's going to be chasing commodities. And gold and silver, yes, is a commodity. Cryptocurrencies is a commodity. It's going to be chasing it. And there's so much money sitting on the sidelines that way. What we call money, it's not really money. And when they realize it's not really money, I think it's going to be an all-at-once sort of a thing at a certain point when they realize that money is losing value too fast for their liking. I think we're almost there. I mean, let's face it, real rate of inflation is probably around 15%. How would you like it right now if you had $1 billion? Right? Think about yourself. You had $1 billion. That's $1,000 million, by the way. That's a millionaire 1,000 times over. You got all that money, and you're going to lose 15% of it to inflation this year alone. That means you're going to lose $150 million to inflation this year if you have that kind of money. Wouldn't you start to think to yourself, I can't make that kind of yield in any market, 15%. I can't make it anywhere. U.S. Treasury bonds are negative yielding. What am I going to buy to get off of this train? Because if I stay on this train, I'm going to lose 15% this year. I'm going to lose 15% of it next year. That's 30%. At what point do these guys start to panic and say, hey, I got to get out of this. I got to get out of this and get into something real. Well, where are they going to go? There's not that many ways to get off of that train if you're on that dollar train. Well, there's fine art. There's maybe antique cars. There's maybe things that are lucrative. But the premier lucrative things that you can hold is gold. Or Bitcoin. Those are the premier ones out there. Those are the two big names, gold and Bitcoin. And, if gold starts to move up really high, silver's going to follow. Silver always follows gold. And if anything, the fundamentals behind silver are even better than gold. How are they going to do their new green initiatives and stuff and build all these cars, EV cars and stuff like that with no silver? How are they going to build all their electronics? This is game over. And you're either in or you're not. The train is leaving the station, guys, on all of this. We all know it's going to be inflation in the end. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.